Welcome to your daily news impacting the markets. OpenDoor Technologies has surged 341.51% month to date, largely driven by an X post from Eric Jackson on July 14th amid the meme stock frenzy. The online real estate platform OpenDoor has seen its gains trimmed over the last 5 trading sessions, declining by 40.08% despite a 340% rise over the past month. However, Jackson, the founder of EMJ Capital, believes that Open isn't a meme stock. On July 14th, Jackson posted a thread on X outlining his bullish thesis on OpenDoor. He announced that his hedge fund had taken a long position in the stock, which was trading under $1 at the time, and predicted it could reach $82 per share in the coming years, potentially becoming a 100-bagger. This decline followed the correction in other meme stocks that rallied with Open during the same period. Krispy Kreme zoomed 41.24%, Kohl's rose 51.30%, and GoPro advanced 85.53% during the last month. But talking about OpenDoor, Jackson told Business Insider, saying, quote, "I'm in this for the long run. I'm not here to pump up a stock and jump out of it. I've never done that," end quote. He explained that he took offense when OpenDoor was compared to the meme stocks, as he thinks of meme stocks as having kind of terrible businesses, and he would never own one. According to him, OpenDoor is a legitimate turnaround story, and he has been bullish on the stock since the pandemic in 2020. According to Benzinga Pro, Open has jumped 159.77% since July 14th, after Jackson posted an X thread highlighting his views on the company. Jackson's optimism was based on several factors, starting with OpenDoor's cost-cutting efforts, the firm's market leadership in the iBuying space following the exit from competitors like Zillow and Redfin, and the potential for a housing market recovery that was driven by expected interest rate cuts. Furthermore, Jackson in his July 14th thread also compared OpenDoor's potential to Carvana's turnaround, where he had also made an early bullish call. He criticized OpenDoor's proposed revenue stock split and called for operational improvements, including better execution from CEO Carrie Wheeler and the potential return of co-founder Keith Rabois. Shares of BitMine Immersion Technologies plummeted in Monday's aftermarket trading after the company filed for a shelf offering to register securities for sale by selling stockholders. BMNR fell 15.1% after hours after the Ethereum-focused company submitted a Form S3ASR with the SEC. The selling stockholders may from time to time sell, transfer, or otherwise dispose of any or all of the securities in a number of different ways and at varying price, the registration statement read. The company clarified that the securities are being offered for resale by the selling stockholders, not directly by BitMine. While it won't receive proceeds from the sale of common stock, it stands to gain about $25.18 million if equity warrants are exercised in full, which might be used to purchase Ethereum and for other general corporate purposes. Typically, such filings allow issuers to offer and sell securities on a delayed or continuous basis, providing flexibility and efficiency in accessing capital markets. However, because they increase the total number of shares in the market, shareholders regard it as dilutive to their existing value, leading to a fall in stock price. BitMine, a small-cap Bitcoin mining firm, pivoted to an Ethereum's treasury strategy, adopting ETH as its primary reserve asset. The company is pursuing its goal to acquire 5% of the circulating ETH supply. Seasoned investors like Cathie and Peter Thiel are betting on BitMine's ETH play. Through his founders fund, Thiel has acquired a 9% stake in the company. At the same time, ARK Invest, led by Wood, acquired a 1.5% position. Notably, ARK Invest purchased 573,853 shares of BitMine on Monday. The transaction was valued at nearly $20.1 million. Former House Speaker Nancy Pelosi criticized President Donald Trump's decision to deny Taiwan President Lai Ching-te permission to visit New York, calling it a dangerous signal that America can be bullied by Beijing into silence on Taiwan. Donald Trump's decision to deny permission for President Lai to visit New York sends a dangerous signal that the United States can be bullied by Beijing into silence on Taiwan, Pelosi stated, citing Financial Times report. This is a victory for Chinese President Xi Jinping. The Trump administration blocked Li's planned August transit through New York en route to Paraguay, Guatemala, and Belize after China raised objections with Washington. According to 3 sources cited by the Financial Times, Li's office said on Monday he had no travel plans due to typhoon recovery and ongoing U.S. tariff discussions. The decision deepens concerns among Taiwan supporters that Trump is softening his China stance while pursuing a summit with Jinping. The Financial Times reported the Commerce Department was told to freeze planned export controls against China during ongoing trade talks. Market implications are significant given Taiwan's semiconductor dominance. Taiwan semiconductor manufacturing produces advanced chips for major U.S. tech companies, while recent reports show NVIDIA ordered 300,000 additional H20 AI chips from TSM due to strong Chinese demand after export restrictions eased. TSM shares previously fell over 2% in July 2024 when Trump, as a presidential candidate, said Taiwan should pay us for defense, demonstrating market sensitivity to U.S.-Taiwan policy shifts. China expert Bonnie Glaser from the German Marshall Fund said Trump wants to avoid irritating Beijing while U.S.-China negotiations are ongoing. She warned the decision weakens deterrence and emboldens Xi to seek additional Taiwan concessions, according to the FT report. In other news, Aeroflot acknowledges problems but did not detail the cause. In a statement released early Monday, Aeroflot warned passengers that the company's information technology system was experiencing unspecified difficulties and that disruption could follow. Russia's prosecutor's office later said a cyber attack caused the outage and opened a criminal probe. The Kremlin called the incident quite alarming. Social media images of Moscow's Sheremetyevo airport showed crowds of stranded travelers, and delays also hit Aeroflot subsidiaries Rossiya and Pobeda, with some international flights to Belarus, Armenia, and Uzbekistan affected. Silent Crow said it had been inside Aeroflot's corporate network for a year and claimed to have copied internal and customer data before destroying resources, assertions news outlets could not immediately verify. The Belarus cyber partisans called the operation one of their most consequential, saying they exploited multiple vulnerabilities over months. The group based out of Belarus told AP their aim was to deliver a crushing blow. The Associated Press noted Russia has previously faced disruptive attacks on government sites and state companies such as Russian railways, while airports have endured periodic shutdowns tied to drone threats. Ukrainian drone attacks have also repeatedly caused mass delays at Russian airports this summer, grounding flights amid safety concerns. Cyber disruptions to aviation aren't unique to Russia. The Seattle-Tacoma International Airport, operated by the Port of Seattle, was snarled by a cyber attack last year, although flight operations weren't affected at the time. Investment bank Morgan Stanley has published a report predicting a $200 billion market for self-driving cars by the year 2030. Analysts Adam Jonas and Tim Shao shared in the report that adoption for autonomous vehicles will take off in the near future, with the growth of AI and comprise 28% of unit sales by 2030, Bloomberg reported on Monday. The report outlined 5 levels of autonomous driving for vehicles and predicts that smart driving would generate over $300 to $400 billion in revenue for companies by 2035. However, the report also spoke about China's dominance in the all-electric mobility sector, writing that an outsized EV user base and tech deflation have given China an early edge. The report also added that Silicon Valley's dominance of AI computing power and data is an advantage for tech companies as well as the German Big Three automakers. The news comes in as autonomous driving in the US could face stricter regulations from the government after President Trump's nominee for the NHTSA, Jonathan Morrison, called for tougher oversight on the sector. Autonomous driving has seen growth in the US as Uber Technologies partnered up with Alphabet's Waymo to expand its services in Atlanta. Elsewhere, Tesla has shared plans to expand into cities like Phoenix and the San Francisco Bay Area, in pursuit of Elon Musk's ambitious plan to serve over half the population of the US with Tesla robotaxis by the end of the year. And that's been your daily news impacting the markets. Be sure to subscribe and follow Benzinga Daily to stay up to date.